And welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 10th of October 2021. Today I thought we'd look at the factors that affect gold mining stock prices. Now here I'm not talking about individual mining stocks, this is more of a general look at the gold mining sector. There are multiple factors that may affect the price of gold mining stocks, but here are the four big ones, and these are the ones that we're going to look at today. So these are the price of the underlying metal, so in this case the gold price, the oil price, currency exchange rates and inflation. Now there are many ways of analysing these factors in relation to mining stock prices, but here I'm just going to concentrate on correlations and beta. The correlation coefficient tells us about the direction and strength of a relationship between two variables. Now, note that this does not tell us anything at all about causation. Just because two things are strongly correlated, it doesn't necessarily mean that one thing caused the other to move. Okay, let's look at some examples. So in this chart over here, there is basically no correlation at all between these two stocks because these dots are scattered all over the place. You couldn't really join a credible line here. Here we can see that the two stocks are very strongly correlated because they fit perfectly along this line. We can also say that they are negatively correlated because the slope is in a downwards direction. So because it's absolutely perfectly on this line, every single dot, that would have a correlation coefficient of -1. In this example here, the correlation is not bad. You can see that the dots aren't too scattered away from this best fit line here. Also, we can say that the correlation is positive because this is sloping upwards. And so what that means is that stock A and stock B generally tend to move in the same direction. Beta tells us about the direction and relative volatility of two variables. So on the chart, that would be the slope of the best fit line. Over here, a high beta stock has a steep slope. And so here, for example, if a stock A moves up by 1%, then stock B moves up by 2%. So that would have a beta of 2. A low beta stock has a shallow slope. Over here, we've got an example of a stock with a low beta because the slope is shallow, but it also has a high correlation because all those dots are very, very well fit to the best fit line. This is an example of one with a high beta, so it's a steep slope, but it's got a lower correlation coefficient because there's more scatter of those dots there. Okay, so now what we're going to do is look at the correlation and beta for the four big variables that I mentioned earlier in relation to the XAU index. Now, the reason that I used this index is that it's the one on TradingView that has the longest price history. Unfortunately, things like GDX only go up to around here. So you know, we want the longest price history we can get. Having said that, this only goes up to 1984, but look, it's the best we can do. Also, this index isn't absolutely ideal because it's actually a mixed gold and silver mining sector index, but look, it'll do. So over here, where it says CC, that's a correlation coefficient. And we can see that this is basically the correlation coefficient for the mining stocks to gold. And you can see that it's generally very high. A lot of the times it's actually 1 or close to 1. Of course, there's the odd time where it actually even goes negative, but it's pretty uncommon. So most of the time we've got a very strong correlation between the gold price and the mining stock prices. Below here we've got the beta, and here we can see on average the beta is about 2, but it has at times been as high as 4 over here. Let's look at oil now. So this is the correlation between oil and the mining stocks. And you can see that it's not really anywhere near as strong as it is for gold. And it's actually much more variable. You can see that it goes up and down, and it only occasionally hits 1. So not as strongly correlated as I thought it might be. And if we look below, look at the beta, and the average beta is about 0.5. And actually, sometimes it has actually been negative over here. Let's move on to looking at the US dollar index. And this one I thought was quite interesting, actually. So if we look here, this is the correlation between the mining index and the DXY. And you can see that most of the time it's actually quite negatively correlated, and quite strongly so. What that means is that when the US dollar is strong, then mining stocks tend to be depressed. Interestingly, so if we look over here, this is the beta between the two. And you can see that most of the time it's negative, which again fits with that correlation. But interestingly, the strength of that negativity has got worse and worse over time. So I guess what that means is that the US dollar doesn't need to get a huge amount stronger for the mining stocks to be pushed down lower. Well, certainly that's been the case over this time. I thought that was quite interesting. How about commodity currencies? Now, this is the Aussie dollar, and you can see here that the correlation between the two is pretty strongly positive most of the time. So that means a strong Australian dollar is associated with strong mining stock prices. So, that might be something you might want to follow, is the currency exchange rates. Similar to gold as well, the beta averages here at around 2, and again it has been as high as 4. What about the Canadian dollar, which is another commodity currency, as they say? So again, pretty similar to the Australian dollar, both in terms of the correlation coefficient being quite strongly positive most of the time, and the beta being around 2 on average. Finally, we look at inflation. Now, the best I could do on TradingView is to use the US 10-year break-even inflation rate as a proxy. Now, this unfortunately only goes back to about 2002-ish, and so it's not going to be massively useful. If we look down here, then correlation, it's positive a lot of the time, but it's been quite negative down here. There's not really any consistent pattern that we're seeing here. And when we look at the beta, it's usually less than 1. So look, this isn't brilliant data here, but all we can say is that inflation has been a pretty minor factor in terms of mining stock moves in the last 20 years. So in conclusion, the most important association with mining stock prices is the price of the underlying metal, that is the gold price. But currency exchange rates are also important. So, it can be worth looking at those commodity currency exchange rates, such as the Australian or Canadian dollar. But I think the thing to take away from this as well is that this covers a fixed time period that has really kind of been disinflationary or low inflation over the past, 40 years or so. The thing is, though, ideally, I would have really liked to have those charts going back to the early 1970s. Unfortunately, I don't have the data to make those kinds of charts, and they're not available on TradingView to do those correlations and beta calculations. But I think that would be absolutely fascinating, because we may get a very different result. Next up, the market update. Let's start with gold priced in US dollars on the daily scale. And look, I think in today's market update, there's not a huge amount to update, really. As we kind of thought, price has been moving sideways for some time, and price hasn't really budged much compared to a week ago, has it? The only interesting thing was that we had this little rally here and that got smacked down. So the problem here is that we got this candle with a very long upper wick and a tiny, tiny body, which, those candles aren't great. Now, if we get follow through on Monday, and of course, Monday in the Eastern markets, first markets to open, it's vulnerable, let's say, particularly with light trading early on. So just watch out for that. Now, what we don't want is for price to drop below this low here, so around 1720. I think if we drop below that, that increases our chances of breaking that 1680 roughly, and a break of that is not good. We're going to go much, much lower. I think there's a if we break that, expect much lower targets. Of course, having these long upper wicks is no guarantee that price is going to go down. It's literally whether you see much follow through from that. So I reckon if we can break 1800 and then 1840, that's what we're really looking for at this stage. But I just got the feeling we've got more sideways movements in the coming weeks. So I'm not going to be able to say a huge amount here until it decides to pick a direction. That's what we need. And a pretty similar story for silver. Again, price hasn't really budged from when I spoke to you a week ago. And again, we got this long upper wick. Interestingly, price got above that midline of this down sloping channel here, and it retested that over here and moved up. Didn't quite hit the top of this channel, but this is a rough one. Silver, I don't think accuracy works with silver at all. You just got to kind of wing it a lot of the time. It's anyway, it got slapped down over here. So what we really need to do here is make it out of this channel. So we're looking at about $23.30, and it needs to go up above there and stay above there. What you don't want is a wick above there and then it comes back down again. And of course, we don't know how long this channel is going to go on for. We've kind of had roughly, again, it didn't quite touch here and this overshot down here. So I don't know how accurate this is, but, we've had kind of 1, 2, and 3 big kind of down moves here through this. So are we going to turn around here? Who knows? Who knows? If we do drop further, then we're looking around $20.50 for the next low if that occurs. And this is the US dollar index, DXY, and on the weekly scale. And so this is just the zoomed out version here. And we joined these lows here, 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 and here. And you can see that it was support all that time. And then once we broke down through there last year, that has become resistance over here. Now, the question is that going to break back through up there, or is it going to continue to add and work as resistance? And if we just zoom in on that, so this here is still on the weekly scale. It's just a closer look at this here. And so the weekly candle hasn't really closed above that line. So you can see here, you got a wick above and then it came back down again, and the same here, and the same over here as well. The body is just kind of on that line there. And so I think if you're thinking that the dollar's going to get much stronger in a sustainable way, then the first thing we need is a close above this resistance line here. So yeah, this is kind of undecided at this stage. If we're looking for a downwards move, then the next target here would be 88. And of course, that would be great for precious metals. And this is the GDX. Now, remember we'd joined these two lows to draw this channel. And interestingly, this actually held, and we did actually do that prospectively. So that's quite good. And it was actually pretty accurate over there, wasn't it? Anyway, we've had this bounce up. Now, is this just a little rally before another move down? And that's entirely possible. We haven't really held above that midline yet. So look, we could come back and drop down before moving up. And the question is, how low? Are we going to take out this low? If we do, then next target's 27.28. But yeah, and while we're still in this downtrend, what we really need is to break out above 33 before we can kind of start thinking that the trend has changed. Is this the bottom? It's too early to say. Now, one of the interesting things, now this bounce kind of looks a little bit pathetic, doesn't it? But see, this is a kind of aggregation of multiple kind of senior miners, gold miners. But when you look at the individual miners, you do get different kind of results. So this is just one that I'd been looking at. And you can see that in the past roughly 8 trading days, this has gone up almost 40% here. And I've been looking at this one for a while, and back in earlier in the year, when gold had kind of formed its first kind of bottom and then rallied up, back there, a similar kind of thing happened. This moved very early and quite strongly during that. And again, it's kind of doing that there. So that kind of makes me a little bit more hopeful. And there's a couple of mine that I've seen do this in the past week or so. Does it mean anything? Don't know. But yeah, interesting. And finally, we got the junior miners. Now, this is interesting. This bounced off that 50% Fibonacci level that we talked about last week. So it's kind of bouncing up. We can't say that this downtrend has been broken yet. We would need to at least break a trend line. If we drew a line down here like this, we need to break that first of all, and then we'd need to make a new high above 14 basically. So again, still early to say, but there is hope. Let's say there is hope. If this comes back below here and breaks this low here, then we're looking at the kind of 61% Fibonacci level further down at about 10ish. So yeah, not much new to say, I'm afraid. Anyway, that's it from me for this week. All the best and see you next week. Bye.